Hello, everyone. It's Allie over at the Core Group. We're excited to get started here shortly. I want to do a quick housekeeping. Where everybody's on mute, but if you do have any questions during the broadcast here, just please write them into the question box, and I will make sure that we get to those at the end. Robert Beatty's on the line, and Alan Bradley will be going over this new product for us. So with that, why don't you guys go ahead and take it away?
Thank you, Allie. Good morning, everybody. Afternoon, wherever you are. Thank you for joining us, taking some time and joining us on this call. We're presenting today what we think is a very exciting new product when it comes to guaranteed income for our clients going into retirement. It's an AIG product called Assured Edge Income Achiever. And what we have found is that if you have clients that are looking for a guaranteed income stream, they have an asset, a lump sum asset, they want to maximize the income that they can get off of that asset, with a guaranteed lifetime income stream, can't ever stop or run out of money. This is a fantastic product. The product itself is a multi-year guaranteed annuity, a traditional fixed annuity, but it is not something that you want to put money into trying to maximize. If you're looking for pure accumulation, I want the highest rate of return, looking for a substitute for a CD, and at the end of the term of the CD, you just want, all you want is the highest yield that you can get. That's not this product. But if your client's looking for taking a portion of their retirement assets going into retirement, and they want to optimize and maximize the income stream off of that pile of money, that portion that's going to generate income, this product has got to be considered and looked at in every single case. This product is competitive. You know, though it's a multi-year fixed guaranteed annuity, it's really an alternative to a SPIA or a deferred income annuity versus looking for pure accumulation. And it's a relatively simple product to understand, and with a lot of caveats. And today we're going to go over the simple part, and then we'll cover all of the caveats. You put in, you buy it. It's a single pay product. You can only add money into it up to the 60 days after the policy is issued. After that 60-day initial period, the value of the contract for all the calculation purposes is frozen. You can't put more money into it. At that point, based upon your age at the time of the annuity, or a joint age, if you're doing a joint scenario, there is a guaranteed percentage of income distribution that's going to be generated off of that annuity or that deposit. For example, and we'll go through some examples, but if you're 65 or age 60 and you put the money in, the guaranteed income stream is 6% for your life, so $6,000. But there's also a growth factor. For every year that you don't take the income off of that, that guaranteed income stream is going to go up by a guaranteed bump up every year. And that bump up is based upon 7.5% of the initial guaranteed stream. So you calculate what that number is. That number will never change. It's not compounded. It will just add that dollar amount to the guaranteed income until the year you start it. Then that will be your guaranteed income stream for the rest of your life. Even if the account value goes to zero, that is going to be your income stream for life. So if you're 60, you put money in January, day one of your 60th birthday, on your 60th birthday, and you wait until age 65, the end of age 65 to take it out, your income factor is going to go up. 6% is the factor at age 60. It's going to go up by 7.5%. That calculation first year, it's going to add that on every year. And then when you turn on the income stream, that'll be your guaranteed income for life, regardless of what the underlying account value is. So what are the guarantees? The initial interest rate credited to the contract is guaranteed for the first 10 years, 9 years in California. So right now, I believe it's 1.55. We'll get into an actual illustration with the rates, and the minimum is 1%. So for the first 10 years you're into this, they guarantee you'll earn 1.55% on that money, and at the end of the 10 years, every year thereafter, it'll renew every year on a declared rate basis, but it can never be less than 1%. Your guaranteed minimum withdrawal value is always you'll never receive less than 87.5% of your premium, less prior withdrawals, earning an annual rate that's specified in the contract. The minimum amount for this contract is $25,000. The maximum amount without prior approval is $1 million. That's not saying they won't do more than $1 million, but we have to get written approval from the company prior to taking those premium dollars. And again, after the initial premium, the subsequent premiums will only be allowed for the first 60 days. Issue ages from age 50 to 80. And if it's a joint contract, it's based upon the older joint contract's life. You can have a single life, a joint life, you can have non-qualified, you can have a traditional IRA, and you can have Roth IRAs. So taking a look at the lifetime guarantees, this is the technical language, and we are happy. Anybody that wants the information sent out after the call, we will follow up and send you these pieces if you'd like to really drill in and get detailed information to have in front of you. We have client guides for this, we have advisor guides, we have the how-to, we have every aspect that you could want. Feel free to reach out to us. But what you do is the initial guaranteed lifetime income amount it's going to be the total eligible premiums multiplied by the income percentage, and I will show you the income percentage screen, and we'll also send that out to you what it is. It changes at every single age, and it's based upon the younger person if joint coverage. The amount will increase by the income credit every year that withdrawals are not taken until lifetime income withdrawals begin. The income credit is a dollar amount calculated by multiplying the initial guaranteed lifetime income amount by 7.5% income growth rate. So you take for example, if it's $6,000 is your initial stream, then it's going to go up by $450 a year thereafter, every year that you don't take income. Again, it's not compounding. So we've calculated that 7.5% simple growth is $450, 7.5% of the $6,000. So that will go up every year. If you defer out for 6 years, your income amount at the end of 6 years will be $8,700 a year guaranteed income off of a $100,000 deposit. Again, it's not indexed for inflation. It does not compound. It's just every year we'll add that additional amount. And then you elect to take income at some future date. And again, you can defer it. There's no cap on the roll-up. After 10 years, you defer it for 15 years, it will continue to go up by that dollar amount. So there's no capped out top end. The rider itself costs 95 basis points. So again, when talking about this from an accumulation, if I'm getting 1.55% and they're charging me 95 basis points, my actual growth rate on the cash value in this product is going to be 60 basis points until I start taking distributions. It's not built, you're not looking at the account value and saying, oh, look at that fantastic growth if I change my mind. That's not this. This is a pure income play. If you take excess withdrawals in the contract, they will. If you take withdrawals during the deferral period, in any year that you take a withdrawal, whether it's excess or within the parameters of what's acceptable as withdrawals that's not considered excess, you will not get that year's income credit step up. So if in year 4 you decide you want to take a 10% distribution, you will not get the income credit attached to the income stream in that year. You can cancel the rider, but if you cancel it, you can't put it back on. Penalty-free withdrawals, you can get 10% free withdrawals from the value as of the previous anniversary. There's no withdrawal charge or MVAs applied. This product is an MVA product, which means that if you take out excess withdrawals from the product, they'll charge an MVA to either reduce or increase that distribution. In a rising interest rate environment, the MVA is going to have a negative impact on your withdrawal, and in a decreasing interest rate environment, your withdrawals will actually increase. But I got to tell you, where we are in the interest rate cycle, you have a whole lot more opportunity for the MVA to have a negative impact, because interest rates can only go so much lower and aren't going to generate that much of an MVA on the plus side versus the potential for increased rates from here. It's a 10-year surrender product. You can see the schedule 99876543321. Withdrawal charges are waived for extended care, terminal illness, and long-term care needs. But you still need to be careful. If you start taking out withdrawals in excess of that guaranteed living income, you're going to impact the future living income benefits. I was describing this to a colleague of mine. I said, this is a great product. It's fantastic for optimizing income for the clients, but it's also a little bit fragile. You don't want to be putting money in here that you are not sure you can let sit and percolate for the time frame needed prior to turning on the income. Because if you take money out of it, even required minimum distributions can have a negative impact on the amount of the guaranteed income stream in the future. So this, if I'm got a big pool of qualified money, I'm going to put a portion of that qualified money into this product, but I'm going to take my RMDs out of other qualified monies and not take them specifically out of this product to satisfy my RMDs if I'm looking to optimize and maximize the guarantees of this product. So we're going to look at an example. We have someone who's issue age 60, they're single. They're going to start distributions at age 66. Their income percentage set at issue date is 6%. And the full annual guaranteed income amount is $8,700. The total illustrated income benefits are $261,000, assuming that there were no excess withdrawals taken out. So here is the scenario. The guaranteed interest rate for the first 10 years is currently 1.55%. That's the declared rate. And once the policy is issued, that can't change. But there's no guarantee that the 155 AIG could lower that or increase that for new contracts going forward. It's going to be whatever the rate is when the policy is issued. This illustration then shows the guaranteed minimum crediting rate of 1%. You've got interest credited, and then you see the rider fees. And again, so you can see from a contract value, this thing is not designed to optimize accumulation. Then you've got your withdrawal values in the contract, and you have your minimum withdrawal values in the contract, your cash surrender values of the policy. And then you have your guaranteed death benefits. As you can see, the guaranteed income amount continues to go up each year by $450, which is the 7.5% of the initial $6,000. And then when you start distributions, it's locked in at $8,700. At age 78, the contract values all go to zero, and the income stream continues out for the life of the contract, for the life of the individual in the policy. Pretty straightforward. So, as I said, this policy is really, it's a fixed annuity. It's guaranteed to optimize income. It is not guaranteed, it's not for max accumulation. It's not a substitute for the multi-year guaranteed annuities that we're showing, the 3 and 5 and the 7 and the 10s, where we're just trying to get the maximum crediting rate we can going forward as an alternative to, say, CDs, savings accounts, or money market funds, or bond portfolios. This is about guaranteeing income. It is a substitute for deferred income annuities and SPIAs. So if you have clients that are either currently looking to turn on income, or they're approaching retirement, they're looking for guaranteeing a portion of their income stream going into retirement, this product is one of the finest. And then you can compare it to the living benefit riders on the current VAs in the industry, the living benefit riders on the current fixed index annuities in the business. This is one of the best in the business right now across all of the annuity product lines. It's a great product, warrants consideration. If you've got clients or you want to see illustrations for this product, you can reach out to annuitydesign@coregroupusa.com and provide information. We're happy to do the illustrations. And when you reach out to us looking for guidance, is this the right product? If there's other alternative products out there in the annuity portfolios that we have access to. We're going to say, listen, here's this product, but you know what, for this particular client circumstances, this might be a different, we'll provide you the other solutions to show you other alternatives if this isn't the best solution for your client. It's not, you know, that's our whole process. When you bring us an opportunity, we're looking to optimize the outcome for your client based upon what it is they say their objectives are. What we have found is right now, this is a fantastic income product solution. So pretty simple, pretty straightforward. Give us a call if you need additional information. You can also email info@coregroupusa.com, and we can send out client pieces, product brochures, illustrations. This is how it breaks down for the guaranteed income stream. So if you have someone that's age 70, the initial guaranteed income is 6.75%. And if you defer that out another 5-6 years, you can pick up you'll pick up 7.5% of the 6.75%, growing that forward. So again, great product, great solution. And that's our presentation today. If you have any questions, comments, feel free to send in the questions via the webinar, or feel free to call Core Group, either call our case design team or annuity design team, call your relationship manager. We're happy to assist and get you more information, and happy to help you illustrate this for your client. Allie?
So Rob, I'm not seeing any questions right now. Chip was hoping we would see an illustration, which you showed. So I think with that, I think we might be able to wrap early. But like you said, if there's any other questions, please feel free to reach out. We're all available here and happy to help in any way we can. And with that, everybody have a great day. The recording will be available on the website, and I will be sending out the link shortly. Thanks all.
Thank you, Allie. Have a good day.